Rob's Child. Nothing I say is investment advice. I wanted to do a video on the effect of birth rates and economies globally and nationally. If you look up the global birth rate right now, it's sitting at 1.73. This is lower than the replacement level of 2.1 globally. And so, by that metric, the world's population is currently declining. Typically, population shrinkages happen mostly during war or plague, these kinds of scenarios that just wipe out a bunch of people all at once. But we are in a situation now where it's a little different. We have a lot of powerful people, a lot of governments dissuading people from having children. You know, for a long time, I grew up in an era where we all knew about the one child rule in China where, you know, they wanted to slow down their population growth because they felt like it was getting out of hand. And today, with environmentalists and such, you know, it's very popular all over the world that the idea that, you know, we can't increase the human population forever because, you know, the world can't sustain that much human life. Of course, there are plenty of people that say, well, the world could actually handle a lot more people than we have right now, but that's not the point. The point is that we're in a situation where the birth rates are below replacement level. And so what I want to talk about is the effects of that on the economy. The first illustration that I want to sort of share to imagine 100 acres of land, and there's 100 people, and each person has 1 acre of land. And then sometime later, there are now 50 people, and there's still 100 acres of land. Well, then what happens? How does this work? You know, what's changed? You have twice as much land per person, and so in a way, everyone's wealthier, but you also have less people to provide goods and services. And so in that way, you have less wealth. You have less ability to be able to obtain resources, essentially, in a weird way. The odd thing about the Fed wanting to have a target inflation rate of 2% is that works pretty well when you have population growth. But when you have population shrinkage, is that appropriate? Is that the right way that we should be doing things? I'm not so sure. I'm not convinced. In fact, I'm wondering if having a negative 2% inflation rate or a 2% deflation rate would be more appropriate, honestly, at this point. But that's a whole nother subject that I might want to do another video at some point in the future. The bigger point here is what's going on economically and what can the effects be. So we've already gone over the first big point, which is that, you know, there's no incentives for birth rates to go up. You know, there were periods where there was government encouragement to get birth rates up. This is what caused the baby boom generation. The government directly incentivized birth rates to go up. And it wasn't just the government doing it. There were cultural factors involved, of course. Seen in that era as having children, having a family was important and a cultural normal thing to do. These days, it's quite the opposite. We're being incentivized to do the opposite right now. Whatever your political beliefs are, the family structure, the idea of uh, mother and father raising children in today's age is almost offensive. If you're listening to a lot of media sources out there these days. And so we're living in a very strange period from that point. But going back to the government incentivized things that they did. So there was the GI Bill, which helped the World War II veterans with education, housing, job training, and it helped them be able to start more families. One of the big things that was going on was they had government policies to help suburbanization. During those post-war years, there were housing initiatives and mortgage assistance programs. All of these things contributed to people wanting to have more children, and they did. And then, we ended up in the 70s where we had, too much inflation. It got too hot too quick. And then from that period, we've kind of gone the opposite way. We said, oh, well, look, the world's heating up. There's too much garbage everywhere. We started worrying about that. And so culturally, as a whole world, we've been on the path of lowering and lowering birth rates, and now it's actually below the replacement level. The world's population at this point is set to shrink right now. I don't think it has actually shrank yet, but it's clearly on that path, especially with the rate of births right now. So that's one side of the equation I want to talk about in this video, is the effect, well, just the fact that there is population shrinkage right now. On another important thing that's going on now that I think is probably the most important thing going on right now, as far as world economics go, is we're on the verge of a lot of innovative tech taking over a lot of things. We have vehicles that are going to be driving themselves. We have a lot of jobs that are going to be more and more either replaced or supplemented with artificial intelligence technologies of all kinds. In some ways, it's going to increase GDP. It can make people more productive when they have these tools to be able to achieve a lot more, a lot easier. And so that actually can, funny enough, contribute to inflation in a way. However, the big deflationary issue is that it sort of means that labor can be cheaper. It sort of means that goods can be cheaper and services can be cheaper on the technology side. What the rate of that is, how much that's going to happen, it's hard to say. It hasn't, the biggest thing is it hasn't happened yet. We haven't experienced inflation from technology yet in this AI growing era, I don't think. And so right now, the way that I see it is technology boom plus population shrinkage equates to a number of things. The first thing is, I think, more expensive labor. Now, as much as AI and robotics can take over and, even build houses, we still need people to build houses, design things, fix things. And as a population decreases and you have more and more people that are retired, that are not working anymore, and you have less and less workers, the expense of the workers will go up. The expense of their services has to go up. So that's one aspect. That's one thing that can happen. And with that combined with, again, with lower demand of services overall because of the population decrease, you're what I would expect is quite a bit of earnings contraction pressure. So, you have companies, they have to pay more for the workers to produce things, the margins of profit get smaller and smaller. And so, as far as, stock market valuations go, it, I don't think it would be unreasonable to expect a shrinkage in asset values in that area, except for maybe healthcare and innovation. So things that are replacing people's jobs, and also healthcare costs. An aging population typically increases healthcare costs. And so those two areas are probably, I would think, would do well. Additionally, this surge of fiscal spending that we just went through recently led to inflation. A lot of people think the inflation is just not going to stop, but I don't see how it can continue based on sort of the bigger picture here. Like, yeah, you injected a bunch of money all at once, but there's no other forces driving inflation to go higher. Quite the opposite. And so, again, with less people, I mean, look back to the example of the land, where you have 100 people on 100 acres. What about gold? You have less people. Well, all of a sudden, the actual value of gold sort of has to go down, doesn't it? In a strange way. When you have populations increasing, you have an increase of goods and services available, and the amount of gold in the world stays the same. Well, then the value of the gold can go up. But when you have the opposite happening, well, I think it'll go down. I also think that it will, in that scenario where you have 100 acres, the value of land from 100 people, as it's going down to 50, the value of land has to go down with it, and it has to do with each person's ability to own more land increases by default. And this isn't even thinking about money or dollars or anything. It's just, people and space. So I expect real estate to not do well moving into the future, as long as demographics remain consistent. And like I said, gold, a lot of things may decrease in value. And so, my favorite areas of investment are innovation, healthcare, especially healthcare and innovation. And that might be like an Kathy Wood's ARKG fund, something like that, I think might perform well in this environment. Another thing, I didn't bring up was energy. So, with innovation requires more energy, but if there's less people, maybe the energy at least we don't necessarily need more energy if there's less people. Unless we have more people using more energy. But, that might actually balance out if you think about it. The amount of energy that the world can produce now, we're holding ourselves back. OPEC is always talking about, cutting barrels per day, millions of barrels per day, in order to keep the prices high enough for it to be worth it to them or whatever. We have plenty of energy, and, overall, especially if population rates decrease at a faster rate from where we are right now, I would expect energy to continue to get cheaper. And I would expect it to get harder and harder to generally be able to make any returns on any investment. And so this is why I personally also really like treasury bonds as well as part of my ideal portfolio. So to wrap up, my general idea of this video is that we have shrinking world population. It's below the replacement level right now. And we're also experiencing a bit of a tech boom. I think this will lead to more expensive labor, cheaper housing, cheaper real estate, lower overall demand for goods and services. It will cause a bit of deflation in a lot of areas and smaller margins, especially in asset values like most stocks. I think that the yields on treasury bonds will have to be forced lower in order for the companies to be able to compete properly with it. It just works that way. I think gold will get cheaper, and I think energy will get cheaper. And I think that decent places to invest in this current period are likely healthcare, innovation, and treasury bonds. Last reminder, nothing I say is any kind of investment advice. You are responsible for your own choices. I hope you found this video to be informative, and thank you very much for watching. Rob's Child.